Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson, we continued our Forex trading course with a lesson on how to place your first Forex trade using your real-time demo trading account. In today's lesson, we're going to continue our discussion on the logistics of Forex trading with a look at how positions are sized in the Forex market. So let's get started.
As with any market, you need to specify the amount of a currency pair that you're going to trade as part of the trading process in the foreign exchange market. Although technically there are no standard contract sizes in the Forex market because it trades over the counter, most Forex trading firms standardize the minimum position size in which you can trade. Once this minimum position size is established, the trader can then trade in any increment of that size. Although it varies by firm, most Forex trading firms offer at least one of the following options for position sizing. The first option is what is known as a standard account. A standard account trades standard contract sizes, which in the retail FX market normally means 100,000 of the base currency. So for example, if you are trading Euro US dollar on a standard account, then the minimum position size you could trade would be one contract, which would equal 100,000 euros against the equivalent amount of US dollars. As the Euro US dollar is currently trading at 156.78 as of this lesson, that would be 100,000 euros against 156,780 US dollars. As a second example, if you are trading dollar yen in a standard account, then the minimum you could trade would be 100,000 US dollars against the equivalent amount of Japanese yen. As the Japanese yen is currently trading at 101.27 against the US dollar, this would be 100,000 US dollars against 10,127,000 Japanese yen. The second option is something which is known as a mini account. A mini account trades mini contract sizes, which are 1/10 the size of the standard contract size or 10,000 of the base currency. So using the example we just used, if we were trading Euro US dollar with the current rate at 156.78, then the minimum you could trade on a mini account would be 10,000 euros against 15,678 US dollars. If you're trading dollar yen with a current rate of 101.27, then the minimum amount you could trade on a mini account would be 10,000 US dollars against 1,012,700 Japanese yen. The third option is known as the flexi account. A flexi account allows you to trade in any size you would like. As the platform we are working with uses either the mini or the standard contract size, and because it gets a little complicated when deciding on your own contract sizes, for now we're going to stick with just the mini and the standard contract sizes. As you can see from these examples, one of the great things about the Forex market is the ability to trade in very small position sizes, which allows traders to start with a smaller account balance and avoid being over-leveraged, something we will discuss in later lessons. Secondly, as normally the spread which you pay does not increase as the trade size gets smaller, and because there are no commissions, the transaction cost you pay for the trade gets smaller as the trade gets smaller as well. This gives traders the added flexibility of opening with a smaller account balance and not being eaten up with transaction costs or being over-leveraged if traded correctly, an option which is not always available in other markets. As a quick example, let's log into our Forex trading demo account and place another quick trade so we can see the position size in effect. If you've not done so already, I encourage you to pause this video now and click the free demo registration link above this video if you're watching on informedtrades.com, or to the right of this video if you're watching on YouTube, and register for a free demo so you can follow along as well. Once logged into the demo trading platform, choose the currency pair that you want to trade and click on the dealing rates window to bring up the market order box. Once you have this box up, you should see here in the market order box an amount K line, which defaults to 100, which means 100,000 of the base currency. If you've been following our lesson up to this point, you should now know that the demo accounts that we are trading on are standard demo accounts, which trade standard contract sizes of 100,000 of the base currency. So here you can decide your position size if you want to trade one contract, 2, 3, 4, all the way up to 1 million. And if you want to type in even more than that, which at this stage we probably don't want to do that, but just to show you, you can do that. For this example, we'll just trade 200K here. Click OK. And you see that move down into your open positions window, and you've executed a 2-lot position there if you did the same thing that I did. That's our lesson for today. In our next lesson, we will learn what a pip is, as well as something known as fractional pip pricing and how to calculate profits from that. So we hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comment section below. And good luck with your trading.